Hi guys, welcome back to the channel, Subsistence Traveling. I'm your host Jay. Today we're talking about 10 Canadian stocks to buy now. I kind of believe that a crash is coming, so I'm doing this so we can have our lists ready. Also, I think it's time to look for opportunities outside the US, and the Great White North is a good place to look. These companies are all listed on the NYSE. No gold miners or marijuana stocks. Those are separate videos. All right, so I'm going to give you some time to look at the disclaimer. And I encourage that we stay connected. Follow me on Twitter at SubsistenceTRA1 and support my Patreon, Subsistence Traveling. I have links below. All right, so the case for Canadian stocks. Okay, all right, so we have decent valuations. Right now, the broad Canadian market is trading at 1.5 times book value versus 3 times book value for the S&P 500. A growing economy. Um, Canada has been focusing on immigration, and so they have good demographics, a lot of immigration, and a growing economy. Excellent yields. Canadian companies are known to pay some of the best dividends out there right now. Real assets. Canada is still a resource-based economy. Even though they're diversified economy, a lot of resource-based companies are based in Canada, so that gives you access to a lot of real assets. Like your metals and gas, oil, energy, and so forth. Also, exposure to global markets. It's a very multicultural nation, and the companies operate all over the world. So gives you exposure, especially their banks. Banks operate all over the world, so that gives you exposure to a lot of emerging and frontier markets. So as always, the criteria for selecting these stocks, we have profitability, valuation, liquidity and solvency, dividend, the fundamentals of the sector/industry. So our first stock is NUTRIEN, ticker symbol NTR, priced at $36.66 with a price to earnings of 20.64, price to book of 0.95, pays a dividend of 4.91%. And the valuation is excellent given this company makes fertilizers and potash and different products, for the agricultural sector. They're the biggest, I think one of the biggest in that field. So yeah, this is definitely something to look at. Next is Alpha Pro Tech, ticker symbol APT, priced at 13.93 with a price to earnings of 26.66, price to book of 4.68, and pays no dividend. Okay, now the valuation is extremely high, over 4.5 times book. But you see, this is a good company for this environment that we're in, especially with this virus. They make disposable protective equipment for the food industry, the industrial, medical sectors, and also for the general public. So that explains why the valuation is so high. So this would be a good stock to hold in this post-lockdown environment. Next is Brookfield Asset Management, ticker symbol BAM, priced at $34.63, price to earnings of 20.92, price to book of 1.83, pays a dividend of 1.39%. Okay, and this is an asset manager. The valuation is, it's almost 2 times book. It's high. You could wait for a pullback on this one, but it's a good company to own. They're an asset manager. They have private equity. They have a private equity firm, a business development company, investments in real estate, renewable energy, infrastructure. This is a really good company to invest in for the long term. Okay, gives you a lot of access to a lot of real assets and so forth globally. Then we have Primo Water, ticker symbol PRMW, priced at $13.20. Price of earnings of 63.32. Price of book of 1.42. Pays a dividend of 1.82%. Okay, and this is almost 1.5 times book. Not bad. Could wait for a pullback, but it's not bad. This company operates in the water space. They offer water purification services, water delivery, and a lot of self-service options when it comes to water delivery and so forth. Okay, so this is something worth looking at. People will always need water. Next is Canadian Natural Resources, ticker symbol CNQ, priced at $17.25. Price to earnings of 13.37. Price to book of 0.83. Pays a dividend of 7.27%. Okay, and the valuation is excellent. This is less than book value. This is an oil and gas company. And I have to say, this is probably one of the best oil and gas companies out there. One of the best. Good balance sheet, good cash flow. A lot of good metrics, especially if you understand the oil and gas industry. I'm not really going to go into this, but this is probably one of the best energy stocks out there. Okay. Next is STANTEC, ticker symbol STN, priced at $30.35. Price to earnings of 23.54. Price to book of 2.29. Pays a dividend of 1.51%. Okay, now this is an engineering / architectural firm. They do a lot of projects, big, whether it's government or private contracts and so forth, construction and all that. Valuation is high. A lot of people are excited, especially, given a lot of nations have proposed infrastructure bills and so forth. So, this would be a good company if you believe there's going to be a lots of infrastructure spending. Next is GILDAN Activewear, ticker symbol GIL, priced at $15.70. Price to earnings of 13.04. Price to book of 1.9. Pays a dividend of 0%. Okay. Well, the valuation is high, almost 2 times book. Obviously you should wait for a pullback. This company, this is a good company though. They're in the apparel business. They make apparel, socks, underwear. Matter of fact, they're one of the biggest apparel companies in the world. They're one of the biggest t-shirt makers. I mean, if you're wearing a t-shirt, it's a good chance that that t-shirt was made, because they supply a lot of brands with t-shirts. Okay, so this is definitely, people always need clothing and so forth. So this is definitely one to look at. Next is Magna International, ticker symbol MGA, priced at $44.47. Price to earnings of 8.53. Price to book of 1.29. Pays a dividend of 3.60%. Okay, and this is a really good company. I was looking at this company in the 20s, but it shot up to 40, over 40 in such a small amount of time. Nevertheless, still decent. Just a little bit over book value. Still decent valuation. This company makes auto parts. They're an auto supplier to a lot of the auto companies, and especially with the move towards electric vehicles and so forth. This is definitely something I feel like I missed out, because I was waiting for a pullback, but the pullback never happened. But yeah, this is definitely a good stock to, you could still buy this. I mean, it's not too expensive, and it pays a decent. This is a very good stock to look at. Next is Pembina Pipeline, ticker symbol PBA, priced at $25.35, price to earnings of 10.49, price to book of 1.33, pays a dividend of 7.34%. Okay. Now the valuation is okay, just a little bit above book. Okay. This is a pipeline company. They have oil and gas pipelines. Excellent balance sheet, excellent cash flows. Just a good company. And I think resource prices are gonna continue going up, even though their business has nothing to do with the price of the resources. I think they should continue to see good business, going forward. So yeah. Last but not least is TELUS, ticker symbol TU, priced at $17.09, price to earnings of 16.35, price to book of 2.31, pays a dividend of 5.08%. Okay, and valuation is high. However, this company has very good, consistent earnings. This is a telecom company. They own a lot of telecom infrastructure, especially, cell phone towers and so forth, because the cell phone tower stocks here in the US are high. But yeah, this is something worth looking into. I believe the Canadian government will move towards a more deregulated telecom industry, and I think this company will benefit from that. Okay, so it's it's a little bit overbooked, but I'm not sure you'll get a good deal unless there's a crash happens or something like that. All right, so here's some other companies. We have Enbridge, ticker symbol ENB. That's a pipeline company. They're one of the largest pipeline companies in North America. We have Ritchie Brothers Auctioneers, ticker symbol RBA. This company, they hold auctions of industrial equipment and so forth, things like that. Especially with a lot of these bankruptcies in the oil sector, a lot of these companies going bankrupt, you may see a lot of their equipment being auctioned off and so on. So I think a company like this will do good. Shopify, ticker symbol SHOP. I mean, it's a I guess the growth potential for the company is very high. It's just I don't mess with high dollar. It's a high dollar value stock. A high dollar price stock. I don't mess with stocks like that. And it's very expensive. But it's a high growth stock. So we have Bank of Nova Scotia, ticker symbol BNS, and the thing with this is a global bank. They have obviously they operate in Canada, but they also have they're very big in the emerging markets. Mexico, Colombia, Latin America, the Caribbean. This bank has especially in a lot of these illiquid markets in the Caribbean and in Latin America, This bank has operations in those countries, and the growth potential in those countries, when they're booming, they're boom. So that's something worth looking at. Canada Goose Holdings, this is a clothing retailer. A lot of interest in that stock. We have Restaurant Brands International, ticker symbol QSR. And this company, they're one of the largest franchisors of Burger Kings and Popeyes. And I think they own other chains as well. These fast food, especially in a recession, fast food, can hold up very well in a recession. So, this is a very good business. I think I didn't like the debt levels, but I think it's a good business, especially the brands that they have. It should hold up very well. Something worth looking into. So here's my final thought. All right. In the Canadian markets, you find good deals. You have low dollar prices, and you guys know I'm a big fan of low dollar cost investing. You shouldn't have to. The idea of paying $300 to $2,500 for one share, that's just crazy. And in Canada, you tend to find better deals when it comes to companies, and a lot of times the companies have lower debt levels and it's just better earnings and so forth. It's immigration. I believe Canada is one of the best developed, first world developed countries to invest in. The demographics look good for Canada. Growth potential for Canada seems very good. When you talk to a lot of people outside the U.S., where in the emerging markets, where would you prefer to move to, the U.S. or Canada? Increasingly, a lot of people are choosing Canada. So I think Canada is one of the best first world developed countries to invest in. I believe, like I said earlier in the video, I believe a crash is coming. But I think after that crash, Canadian markets will outperform the U.S. markets. When you look at U.S. markets, the U.S. markets need to fall at least 70% just to be at fair value. If Canadian markets fall 50%, they're cheap. Okay, so the U.S. markets, it's just crazy how overvalued an S&P 500 is right now. So I think after this next crash, I think Canadian markets will outperform. All right, so I just want to encourage you guys to like and share the videos, subscribe to the channel, follow me on Twitter, support the Patreon. I have links to the Twitter and the Patreon below. As I always say,